Hi, and welcome to my channel. For those of you new, my name is Dave and I work in financial services. And these videos are a mixture and journey towards financial freedom, financial well-being, financial products so you, like me, can reach your goals sometime in the future. Now let's get into the latest video. Now this video is about my stocks and shares I set for the month of September 2024. Now it's not to boast or brag or say look at me, but it's to give people hope. If I can build a portfolio of six figures, you can too. If you keep from an action plan, invest on a regular basis within a tax-free investment wrapper. So what are the aims of the portfolio? Well, we're looking for annual growth each year of 10%. For 2024, we're looking for annual dividends of £360, so £300 a month on average, and a year-end portfolio value of £113,000. So how have we done year to date? Well, we started the month at 116,564. We finished at 117,610. So a profit of £1,047. So year to date, a return very nicely of 17.51%. So well above expectations. Look at the following graphic. What have we paid during the month? Well, quite random. We paid £390 in the month. So tax year to date of £2,180, predominantly based in financial services products and companies, what we know about. And our platform provider charges fees £15.62, which is about average, as it's based upon a percentage of the portfolio value. If we look at the following graphic, quick geographic about where we're held. So predominantly UK and Europe, 59.19%, which we are reducing. USA and Americas of 28.47%. And Asia and emerging markets of 12.34%. What about dividends during the month? Well, a very good month. We received £634.62. Across our shares, we've got a yield of 6.05% across the 10 shares. Year to date, £3,461 against expectations of £2,700. So we're over £761 about where we forecast at the start of the year. So a very nice position. And what sort of dividend did we receive in the month? Well, Lloyds, the banking group, gave us £209.95, reinvested of 356 shares. NatWest gave us £59.52, so reinvested 16 new shares. Barclays Bank gave us £47.29, 20 new shares. L&G gave us £277.68, so 121 new shares. And HSBC pays a quarterly dividend, gave us £40.18, 5 new shares. So some very good companies, as I said. Average yield is about 5%, apart from L&G, which is paying about 8%. But all reinvested, all will grow dividends for the next payout, where we say when we receive it. So where exactly is the portfolio held? Well, we'll go through the shares in front in a minute. At the moment, we own 10 shares, 8 in profit, 2 in loss. 47% of our portfolio is in shares, of which 40% is in the FTSE 100, 7% FTSE 250. Total share values collectively of £54,881. So let's look at the graphic of what sort of holdings we hold within the portfolio. As I said before, predominantly based in financial services because what we know about, but good, solid, quality companies. We can just switch off. They just invest as what we call long-term holds. So our largest holdings currently Lloyds Banking Group. We now own 20,163 shares, nearly £12,000, 10% of our portfolio. And as we said, we get nice yield, around about 5% was paid in a month. We own L&G, the insurance company. We received a dividend again, as I've said, but we now own 4,749 shares, nearly £11,000, 9%, but a yield, as we said, of 8%. Very nice company. We own Aviva, 1,854 shares, nearly £9,000, 7.5% of our portfolio, but again, a very nice yield of 9%, and that will pay us a very nice dividend at the end of October. We own Card Factory, 3,917 shares, £4,100, 3.5% of our portfolio. Now, it did have results in the month. It was making a profit, but margins were, shall we say, dramatically reduced because of cost inflation, wage inflation, but it is expanding. It's still reducing debt, it's very cash rich, and the dividend was increased. So short term market sentiment, it was down about 20% in the month. We may even top up moving forward, as a long term hold. We own Barclays Bank, 1,651 shares, £3,800, 3% of our portfolio. We own HSBC. We now own 535 as a recent payout, £3,500, 3% of our portfolio, but it was done for diversification for overseas banks. And we own NatWest, 1,008 shares, £3,500, 3% of our portfolio, and again, a very nice dividend paid out during the month. Who knows what will happen about the, shall we say, the banking or the government owning this stake? It was reduced, but since Labour have come in, it's not been reduced any further. It seems to be put on hold for some strange reason. We own AJ Bell, the platform provider, what we see as a growth company. 731 shares, £3,300, 2.8% of our portfolio. Assets under management increasing, companies increasing on the platform, and the dividends increase, but with what we call a growth stock. Now we own Sainsbury's, the retailer, 911 shares, £2,700, 2% of our portfolio, but everyone needs food, everyone needs to eat, shall we say. Has been on a restructuring lately, has been on a turnaround, but the profits are good, shall we say. It is cash rich, and the dividend has been increased, and it will pay a nice dividend late in the year in December. And then finally, we own Phoenix Group, the pension provider. 443 shares. We put £2,000 in recently. It's now worth 2,478, 2% of our portfolio, but it will pay a very nice dividend, and the results were out. It's got a yield of around about 10%, but it's something we know about through, I always say, our current employment. So a nice collection of shares, some very nice dividends paying the month. We can all switch off, but all quality long-term holds. They've all been there, shall we say, many years. They're going to be there many in the future. We just, shall we say, does what it says in the tin, but it meets our objectives. Remember, they're my own personal opinions. If you like the videos, smash the like button, subscribe to this channel. Now let's look at what funds we hold within the portfolio. At the moment, we currently own 9 funds, 5 in profit, 4 in loss. Makes up 53% of our portfolio, collective fund value of £61,322. So let's look at the following graphic. Now our largest fund is a passive ventures fund held by our platform provider AJ Bell. We just switch off, it covers numerous markets. Very low fees, shall we say, but it was done for diversification. £23,500 makes up 20% of our portfolio. We own an LNG technology fund, £13,700, 11% of our portfolio. Owns about 300 stocks, mainly obviously US tech companies, but very good results or year-on-year returns because what's happened in the Magnificent Seven, and it will pay a dividend around about 1.5% in October. We own a Fidelity World Index fund, nearly £11,000, 9% of our portfolio, and we have been topping that up, shall we say, recently. We put £331 into that fund during the month, but we've done it because it's got low fees of 0.12%, and it owns around about £3,500 shares, but it's given a year return of around about 10%. We can just switch off. Now, some funds that have struggled lately is our China fund or emerging market funds. Now, there was some kind of stimulus within China, and they've had a very good result lately. But at the moment, our China fund is £2,500, 2% of our portfolio, but it's shown a loss, shall we say, at the moment. But it has had a very good month. Hopefully, it'll recover in future. When it's back in recovery, we're going to excellent funds. We're going to simplify our portfolio. We own 2 emerging market funds, £1,900, 2% of our portfolio, and a second emerging market fund of £1,400, 1% of our portfolio. But again, they've had good results during the month because of what's happened with the China stimulus program. One fund that has struggled though is the Russia fund. We put £500 in, it went up to £600 plus, so it's up 20%, and it's been affected ever since the Russia-Ukraine conflict. It's been about £230 at that level forever. It's now dropped again, but it's now about £200, but thankfully it makes up 0.17% of our portfolio, so a tiny amount, but it just goes to show how things can accept certain markets. but we're not going to sell at a loss. But who knows what will happen with that fund, but thankfully it's a tiny amount of our portfolio. Now, 2 funds we've bought for a specific purpose. We've put some money again for ring fencing for a specific objective. We put £3,000 in an S&P 500 fund. It's now worth 3.2, but it makes up 2.7% of the portfolio. And we put £5,000 in an FTSE, shall we say, All World Index fund. It's now worth 5.5, and it's worth, shall we say, 4.75%. But we have been topping up the Fidelity World Index fund, shall we say, on a regular basis to diversify away from the UK. Whereas our UK funds or our shares will grow automatically because we've got dividends reinvested. But it just goes to show, shall we say, we've got some long-term funds we just switch off, mainly, shall we say, passive or, shall we say, risk-based funds, but don't, shall we say, to spread our investments. Okay, remember that my own personal opinions, but it just goes to show if I can build a portfolio of 6 figures, you can too. If you learn to invest on a regular basis within a tax wrapper, so all dividends are tax-free, there's nothing to declare, there's no dividend tax. All capital gains is free, shall we say, all within the tax-free ISA wrapper, so use them to your advantage. Remember, if you like the videos, smash the like button, subscribe to the channel, and we'll see you again in the next video.